Hey everyone, welcome to The Explainer. Today we are taking what is honestly a pretty dense, number-heavy financial document, IBM's Q2 2026 earnings report, and we're going to translate it into a clear, engaging narrative. We're essentially unpacking the story of a legacy tech giant that's navigating this incredible transition, right? They're trying to balance their current financial realities with a massive, visionary leap into the future. So, to keep things simple and ensure we don't get lost in the weeds, we've broken this down into 5 logical pieces. First, the AI structural shift. Then, we'll hit the Q2 financial scorecard, do a segment-by-segment breakdown, look at their rapid innovation and quantum efforts, and finally, we'll wrap up with looking ahead to 2026. All right, let's jump into Section 1, the AI structural shift. Before we even look at a single number on a balance sheet, we first really need to understand IBM's massive philosophical bet on the future. And CEO Arvind Krishna actually framed their entire strategy with this exact thesis. He states that they fundamentally believe we are in the early innings of a structural shift for business, and that their portfolio is well positioned to help clients tap the value of an AI-driven future. Notice how that completely sets the company's outlook? They literally view this as just the very beginning of a revolution, and they are restructuring their entire identity around it. Moving right along to Section 2, the Q2 financial scorecard. We're going to kick off a rapid-fire sequence of numbers here just to get our baseline. First up, $17.2 billion. That is IBM's total revenue for the second quarter of 2026. It's just a massive number, and it really reminds us of the sheer global footprint and scale of this organization. But we immediately have to contrast that massive revenue number with this one right here, 1%. That is their year-over-year revenue growth rate. So while the total amount of money coming in is undeniably huge, the actual top-line growth, well, it's very modest right now. But here is where it actually gets really interesting. $4.8 billion in free cash flow, and that's just in the first half of the year alone. So despite that slow revenue growth, IBM's underlying engine is still an absolute cash-generating machine. And that cash is exactly what's funding their future. Rounding out our rapid-fire scorecard is 5%. That's their diluted earnings per share operating growth. Basically, this metric shows us that they are successfully becoming more profitable. Through really strict cost management and productivity actions, they're squeezing more actual earnings out of that mere 1% revenue growth. And this whole dynamic is captured perfectly by CFO James Kavanaugh. He acknowledges right out of the gate that they faced revenue headwinds, but he emphasizes their continued focus on the fundamentals, driving productivity, strengthening the portfolio, and generating that free cash flow. So the big takeaway here is that management is fully aware of the slow top-line growth, but they are responding with intense, solid financial discipline. Okay, Section 3, segment-by-segment breakdown. Let's see exactly where that $17.2 billion is coming from. Basically, there is a massive tug-of-war happening inside IBM right now. As you can see, software is pulling them forward with 5% growth, bringing in $7.8 billion. Consulting kind of stabilizes the middle, generating $5.3 billion and remaining flat overall, though it's up 1% in constant currency. But infrastructure, well, that's the weight holding them back. It generated $3.8 billion, which is actually a 7% drop from this time last year. And for the detailed-oriented folks out there, here is the raw data pulled straight from the Q2 report. We've distilled the facts, but these are the exact numbers driving the trends we're talking about today. Now, if you look under the hood of that shrinking infrastructure segment, it's really a tale of two extremes. On one hand, IBM Z is down a staggering 42%. But hey, before we sound the alarm, this is actually completely expected behavior since they are nearing the very end of their Z17 product refresh cycle. On the other hand, look at distributed infrastructure. It's booming, up 37%. In fact, it just delivered its best quarter of revenue growth on record. Over on the software and consulting side, IBM is riding some massive tailwinds. Software annual recurring revenue hit an incredibly impressive $24.6 billion. Red Hat accelerated to 11% growth, and data revenue jumped 18% in constant currency. But I really want you to pay close attention to those last 2 points. If you've ever wondered when AI actually translates into real-world enterprise dollars instead of just, industry hype, well, this is it. The shift is happening right now in the deals they're signing today. Gen AI now represents roughly 50% of their consulting signings and over 30% of their entire consulting backlog. That's absolutely huge.
All right, let's dive into Section 4, Rapid Innovation and Quantum.
To really understand their future bets, we need to talk about Andron. This is literally the world's first pure-play quantum wafer foundry, which IBM just announced in a letter of intent with the U.S. Department of Commerce. This is absolute proof that IBM isn't just, building software anymore. They are physically pouring the foundation for the next era of computing. And the sheer scale of this bet, it's staggering. $10 billion. That's what IBM is committing to invest in quantum over the next 5 years alone. They are aggressively pushing forward, and they even noted in their report that they remain fully on track to deliver the first large-scale, fault-tolerant quantum computer by 2029. Now, right alongside quantum, they are executing this strategy they call rapid innovation at scale. And a prime example of this is Lightwell. This is a brand new capability designed to address open-source security vulnerabilities. Basically, by leveraging the immense trust they've built through their Red Hat acquisition, Lightwell made over 7,500 security patches available in just its first 2 weeks. I mean, it really shows how nimbly they can move to solve real-time challenges in the tech community. Finally, Section 5, looking ahead to 2026. When we look at their official updated expectations, it becomes pretty clear that despite that slow Q2 revenue growth we talked about earlier, leadership maintains a highly confident outlook for the remainder of the year. The absolutely crucial point to take away here is how they are raising the bar for the full year. They are now expecting revenue growth of 4 to 5% in constant currency. They're projecting a pre-tax margin expansion of 100 basis points. And get this, they expect free cash flow to increase by about $1 billion compared to last year. So how on earth are they doing this? Well, by accelerating productivity. They're actively scaling their software development with AI and optimizing their supply chain, which directly translates into these higher expectations. Which brings us to our final thought. We've seen their incredible ability to generate cash, we've explored that tug of war in their current business segments, and we've looked at the monumental scale of their future investments. So the real question remains, will IBM's massive $10 billion bet on quantum and AI be enough to accelerate their modest 1% revenue growth in the years to come? It perfectly captures the core tension between their visionary investments and their current top-line reality. Well, I hope this explainer helped you grasp the fascinating dynamics at play inside IBM right now. Thanks so much for joining me, and keep exploring.